Having all of these firms come to us, come to our partners and say, what should my stablecoin strategy be? It's almost the fact that if you're not thinking about it, you're being left behind.
Erica Khalili is the co-founder, chief legal and risk officer at Lead Bank. And after years of building Cash App, she is giving the fintech ecosystem a bank that actually understands Web3.
You were getting funded from your VC. Did that money go into your mattress? I bet it didn't. It went to a bank. So why wasn't it a bank that truly understood your business? So you do ask, why do you have a lawyer as a co-founder of your tech company? And that was risk and compliance. And that is such a critical part of the moat. And now we are on-chain ourselves. We are settling 24/7 with Visa and stablecoins. That would be something that could take decades for them to build.
Catch the full strategy on why compliance is the moat, unblocking global stablecoin markets, and building the back end of the digital economy with Drew Rogers and Erica Khalili, only on Stable Dash.
The city by the Golden Gate. Truly the city of many wonders.
Okay, we're back for another amazing conversation. We're here in San Francisco at a very stable conference with Erica Khalili, Chief Legal Officer at Lead Bank. Wow. How's your day been so far?
It's been really, really good. I think we were talking internally and I had dinner with IO last night and the Refract team. And I think having this be the second iteration of this conference is super, super interesting because when you think about it, so much has changed in the last 12 months. And I think the initial conference was so cool in the sense that it was a kickoff to what you've really seen as the emergence of the sector and so many different varied use cases that have started to come up over the last 12 months that we've heard a lot today that this is a technology that it can be utilized in so many different products and services. And it's definitely not going away. So I think it's going to be, something that's very long-standing, and bringing this many folks together, I think is a great opportunity to learn more and network and get to know a lot of other people that are doing really, really interesting things in this space.
Yeah, there's so many people. It's a bit overwhelming to look around and kind of see all these people that you want to talk to, that and it's a good feeling. But yeah, you're right. The momentum, the pie that is growing, it's so amazing to this is work. We're kind of working right now. It's a gift to be in this position, and it's cool to see the pie grow. What has it been like for you and your vantage point? Lead has been such a foundational we can unpack a little bit of how that became what it is, but what has it been like in your shoes? Jackie spoke last year at this event, seeing the last 12 months at Lead. How are you reflecting on that right now? What does that feel like?
I think the last 12 months have been super fascinating to be a regulated financial institution in the sector, because we've seen so much change in the regulatory landscape as it relates to digital assets and stablecoins specifically. So from our perspective, we had always kind of taken a crawl, walk, run approach to the sector. We had very, very high confidence that this was going to be an area that would really reinvigorate and reimagine global payments. And we started to see those use cases. But now, as we've seen the passage of Genius, MiCA, we've also seen Clarity, which, although not law yet, we're optimistic that we're going to get those sort of rules of the road that makes it very, very clean and clear how regulated banks can play in the sector, stablecoin issuers, and how all of those different components can come together to unblock all of these different products and services, both domestically, but also I think more exciting and more is the international footprint that it unblocks, the speed, the velocity, the global reach. And you think about some of the more primitive payment rails, what stablecoins can do from a global basis is really, really exciting for us. And having regulatory clarity obviously is incredibly important to us, and I think to the sector generally. And so kind of taking that macro step back, I think the one thing that the last 12 months has done is really lead towards the credentialization of the space. And I say that because at conferences like this, I often say, sometimes it can feel like an echo chamber of people that are deep in the world, already believe in it. And now you're starting to see the proliferations where at this point, I think every multinational is thinking about it with respect to treasury functions. We're seeing the last mile problem with the stablecoin cards we issue, what Rain is doing, being able to actually utilize those for spend makes the interoperability factor just go so much higher. So I think that really unbundles and unbounds the potential for stablecoins and different use cases just across the globe. It's been a crazy 12 months in the best way possible.
Yeah.
And so I'm very, very excited about the iterations and what this can do. Because if you look at the products and services, even 12 months ago, let alone 24, it's completely different. And having all of these firms come to us, come to our partners and say, what should my stablecoin strategy be? The fact that if you're not thinking about it, you're being left behind. And so being at the forefront and being able to be that partner to people that are doing such innovative things from an infrastructure perspective, and also being such a thought leader with our policymakers in DC has been probably what we are the most excited about in the trailing 12 months. But I think more importantly, in the coming 12 months is what we're looking forward to.
So dial the tape back even more. You're a very easy person to interview. You're very interesting when you speak. It's great. But dial the tape back.
Well, you're not expecting that from a lawyer. You can admit it.
No. I did my homework. I knew what I was getting into. But just I'm, as an Square Block employee myself,
Yep.
I'm someone who is in the position of selling the Square Capital product and like all that stuff. I don't know if we directly overlapped there, but I'm personally interested to hear more of the origin story of that for you, and like what role that was like, the learnings there, sort of the Avengers team that sounded like kind of met at Square in that. I know when I was there, Jacqueline was an incredibly influential leader at that time. I think what my assumption is that the learnings from that period, pains from that period, really drove a lot of the innovation that Lead has been spending years doing. Tell us a bit more around like what were those pain points or things that you guys all felt at Square or that moment, and then how has that played into leading in this chapter?
I like the leading, by the way. I think, one of the hallmarks of what we built at Square together was really figuring out problems to be solved. I was the first one that for a very long time, I thought crypto and digital assets were a solution in search of a problem. And I think what we've seen with stables is they're actually solving these real world use cases. So rewinding the tape all the way back, when we were all working together, we worked with a wide array of banking partners, from the largest of the large to some that were very small. And I think we were always interested in how that could be reimagined and changed in 3 key verticals. So obviously the technological stack, we had to be API forward, we had to be modern. The way we engage with money and money movement has changed so dramatically over the last decade. You can even look to like the pandemic and what that did. My father is an immigrant and he had never used remote deposit capture before. He definitely had never used Cash App, despite the fact I'd worked on it. And then during COVID, my father used RDC for the first time and he was like, well, that's not fraud anymore. And I was like, well, it never was fraud, Dad. But showing that innovation in those layers, we really saw that the way banks needed to function needed to be just completely reimagined. So the technology had to be there, and that had to be table stakes. We had to be exceptional as it related to financial acumen. And I say that, and I'll be a little self-deprecating here, taking things that perhaps are, dare I say, inherently not sexy, although I think reconciliation is a hot, like reconciliation, making them automated and fast and flawless. Because again, I joke with people in my friend group who do different things. Like, we're working with money. We're working with people's livelihoods, how they pay their bills, how they feed their families. You have to be better than good, because when the impact is just untenable. It's not something that we could ever do. So being amazing around that. And then the last vertical, and Jackie and I have been together a long time, so I can say this in full disclosure. When you talk to Jackie Reeses, you do ask, why do you have a lawyer as a co-founder of your tech company? And that was risk and compliance. And that is such a critical part of the moat, because being exceptional at it and being tech-centric allows to take on programs that inherently, and when we got to lead, we'll say 2022, not the greatest era for the digital assets in crypto, but opening that up in a tech-enabled manner and being really exceptional risk and compliance and changing the paradigm. So if you're at Lead and you're a client, we don't call you our clients, you're our partners. Because when you win, we win. We want your program to be safe and sound. We also want it to grow. We have such a strong alignment of incentives that I don't think people found with their banking partners historically. And so it's like, okay, You have a problem. How can we solve it together? And that was so transformational, especially as we got into the digital asset sector. Because again, when we left and decided to go on this journey together, which, given the fact the 4 founders of Lead worked together for over a decade and chose to do this, like, we actually really like each other too as people.
That's great.
So going into this venture, we were hyper focused on the exceptionalness, but also in finding out how we could do things we were passionate about that we thought were transformational from all aspects of the fintech layer, but especially in digital assets. Circling back to 22, there may have been a few naysayers who didn't think we would be able to do what we were able to do. And we were kind of emboldened by that because we were building the tech and building the risk and compliance systems to be the partner that could scale and also to be agnostic to the regulatory head and tailwinds we were seeing and that we're seeing today and knowing that our program would scale. So that brought us to Lead back in August of 22, which I got to say, in the best way possible, feels like a lifetime ago. And that's how we started to get into the stablecoin space because, again, going back to our early days of payments and the evolution of payments, do I think that stablecoins will disintermediate the need for wires and ACH? Totally. I don't. But I think it becomes another rail and it becomes something that adds so much intrinsic value and choice that's how it really takes that interoperability step. So we started there and we started very small. We were just, you were a digital assets company. You needed an operating account. As Jackie said, you were getting funded from your VC. Did that money go into your mattress? I bet it didn't. It went to a bank. So why wasn't it a bank that truly understood your business? Then there was market disruption in the banking sector, and we leaned into holding customer funds, providing on and off, but being very cautious and critical so that our own technology and models could be trained to recognize patterns and reduce the residual risk. And now we are, we recently announced we are now on-chain ourselves. We are settling 24/7 with Visa and stablecoins, which is something we are incredibly excited about because, again, I think that's something that reduces collateral requirements, allows us to be more efficient. And so these are the real world use cases that I'm this actually matters. It moves the needle. And so that's kind of always been Lead's perspective of having such high confidence and then finding the right partners because that's the most important thing that we can do. We're a negative network effect. Every partner we bring on increases the incremental risk. So doing it the right way, I think has also been a differentiator. But, we like to do hard things. And so we were really, really excited to get into the space. And people ask us a lot, what made you so excited? And I was like, this solves a problem. When you are working as a global multinational company, stablecoins solve a real liquidity, capital efficiency problem. Let's start there and see where we can go. That was a very long answer that started with Square and ended with what we're doing today. I feel like I just gave you the story of my life.
That's okay. It's okay. And I guess what I think makes the most sense to unpack right now at this point is the actual customer or partner base, as we've said. What does that look like? I know Lead has the you bought Lead, you bought the bank, and that has customers and partners that came with it inherently. And I'm specifically talking about the stablecoin enabled customers here, how do you if you were to make a very simple kind of broad stroke around here are the kind of partners that we like to work with, or here are the ways that we really are delivering clearly across the market. These are the use cases that seem to really be, crushing that. Yeah. Do you have clear, clear things that come to mind there? I know we've used, I think for our business, Dakota and Bridge and Leads behind that. Maybe speak a little bit to these. We like to call them recipes on our side.
So the short answer is, given the scrutiny in the sector, we started with a compliance first point of view. So if a company wanted to work with Lead, you had to first talk to me and my team because, again, we understood what had to be done from a network effect. So, okay, you understand and respect risk and compliance. You understand financial crimes. Okay, now we get into the use cases you want to support. Things that are super exciting to us were initially global money movement. You look at these corridors that are just traditionally and underbanked, and stablecoins give an opportunity to really open it up. I was actually in Africa last week, in South Africa on holiday, And everyone was talking to me about digital assets and stablecoins. Like my Uber driver was talking to me about it when he
Really?
found out what I was doing.
Huh.
And I was like, he's like, well, this is the way a digital dollar works for me and works for my family across Africa, where you're thinking about inflation and you want to have control. And then, of course, because I'm a chatter, I'm a lawyer, I started to ask about like the need for like, how do you spend those? How do card products ladder in? How do we actually get towards interoperability? So for our partners, we look at the use case and the product at play. Are we looking at something that is just global remittances? We're moving money around the world. Are we looking at something that's consumer centric? Are we looking at something that's business centric? And what can be solved with those? Then let's talk about how this technology can be captured in ways that like, it's great, but if you can't spend it, and yes, the stablecoin sandwich makes a lot of sense in certain use cases, but not in others. Okay, well, why can't we put an access device on your wallet? Why can't we let you buy your coffee this morning directly out of your wallet or pay a bill with your stable coins? Okay, now let's talk about liquidity and capital efficiency. Where are we seeing drag? Where are we seeing inefficient? Where are we seeing cash at rest that doesn't create market efficiencies? And where do stablecoins solve those problems? Those are probably the three biggest use cases that have come to us that really excite us. And again, we serve all around the globe. You know, we have customers in Latin America. We're very interested in Africa. We just really see global money movement and global commerce at a whole new level and that trajectory. And also, like, there are some rails that are not amazing that are utilized today because there's not a better mousetrap. And I think in a lot of ways, stablecoin solves that. It's fast, it's efficient, it's cost effective, and it's transparent in most cases. And I think the biggest questions were a lack of a regulatory framework. Like, what happens if an issuer goes bad? What happens to your money? How do I know that there's actually reserves behind that stablecoin? And so with Genius, you're seeing the federal system kind of lean into what DFS, the New York DFS, was doing initially. And you're giving that trust and confidence because, again, this is your livelihood. We have to have that in order for this to scale and survive. So with that whole feedback loop, we're really seeing a future for the technology. And I have to say, like, what I've loved here is also hearing the total other side of the market with the JP Morgans and the Goldmans and what's going on with trading and repos and all of the capital market stuff, which admittedly, some of it was beyond my depth, but very, very interesting about how the blockchain technology and stablecoins can be utilized for so many different use cases across so many different business verticals.
Do you see maybe the incumbents or traditional banks as, one of those groups that Lead could be serving, or do you see more of what you're bringing as a very clear alternative to that? Or are there ways that the business can serve and sell into that type of audience?
Listen, we're hyper transparent, Jackie, like we're 3 billion in assets. So like size is always a component of what we're thinking. We will always be responsible from a capital and liquidity perspective. And so when you look at those large scale institutions and some of the balance sheet capacity that you need to really support these, to hold that scale of reserves, et cetera, like we're probably not the right partner. And we tell people that.
Yeah.
That being said, when you look at the front end infrastructure and the technology to actually effectuate those,
yeah.
I think that's where we become that layer that becomes really, really important, where you're a giant GSIB, but you need the technology to actually be coming in and out of stables, to actually be settling with the networks. And that would be something that could take decades for them to build, but they have the collateral capacity to hold reserves, invest them in a way that like today we don't. So we have a lot of partnerships, honestly, with larger institutions that can provide those balance sheet solutions and the size where we provide sort of the thought leadership and the technological infrastructure.
Interesting. It's sort of a both. You can do both.
Yeah. And listen, I think for a long time, everybody was leaning out, and Jackie chatted about it a little bit this morning. It was a risk-based decision. If you didn't understand how stablecoins worked, how you could look to make sure the reserves had great health and hygiene and would be there, people pulled back. And that's a risk-based decision that we fully understood. But now you're seeing so many want to lead in. And listen, are we going to see a proliferation of tokens? Of course we are. Like it's going to happen. And I think we'll see a lot more protocols, we'll see a lot more tokens, and then we'll figure out from the utility, the market will drive what makes sense. And so we're really excited for like how we can then take a lot of those interbank flows, put them on chain instead of waiting between banks. I can do that. If y'all here are lead customers, like I can move your money 24/7 on my books. But what if you want to take the money to JPMC? Okay, well, maybe there's a settlement token that comes into play. So there's just endless possibilities, even within the more niche, like regulated bank system.
Yeah, I think we need to wrap here, but I'll ask one more question. So I mean, from my vantage point, this is Drew speaking. I think Lead has almost, pole position and early mover advantage. We are starting to see a lot of these really key hurdles, clarity. In some ways, that's really exciting because, companies and other banks are getting approved for things and things are moving quicker, and like hurdles and barriers to entry they seem from the outside to be lowering a little bit. How is Lead going to continue to stay competitive, stay differentiated, stay ahead? Like, what are some of these key things that as more companies realize that, hey, they're onto something really big here, and like, there's a huge opportunity, and how do you continue to stay in that position?
So I think from my perspective, the first principles of how we built Lead are always going to be our competitive advantage. So like there will always be competition. There will always be people that are looking to go into the market. I think we are never satisfied and we're continuing our evolution. I think, again, we have the primitives and we have the risk control systems already in place that are the key fundamental foundation to build into and create those next innovative layers. But we fully appreciate competition. And I think more folks getting into it, more charters being approved for the digital asset space, there's still a need for full service banks, even with, trust company charters and whatnot. But what that does is like, and we were chatting a little bit, a lot of us are from the Midwest. I grew up in Chicago, like again, talking to my dad, like, how do we credentialize stablecoin payments to like our families? Like for a while, my dad asked me if I worked for Bitcoin. And I was like, not a thing.
I still get that.
Yeah. Figuring out like with more of the institutional players moving that way, it opens the aperture and the market for stablecoins goes up exponentially. And to be able to offer that side by side with traditional payment rails, traditional lending products, depository products, I think that's really a competitive advantage for us. But we never want to let go of like the first partners we brought on platform who took a huge risk on us too. And we've been able to build with and grow with and maintain the quality bar of what we're doing. And that I think is the most exciting stuff to us today is like, what's next?
What's next? I guess we'll have to see you next year. Well, what I'd love to do, I know we got to wrap here, but what I'd love to do is the next step with you, given, some of these differences of like charters versus MTLs versus, there's so many differences there. And it would be fun to have like a working session with you, like on the live show or something, and just kind of get a lay of the land of like, hey, here are the companies, here's kind of what everyone has, here are the ones that are pending. I think there's a lot of confusion of like what licenses or what things mean what, and what those things can enable you to actually do.
Totally.
State is very different than, a bit license, like stuff like that. It would be really fun to geek out with that.
So I have a deck, but I will warn you, I have been told systemically, including in my Square Days, that I make the ugliest slides that anyone has ever seen.
We can help with that.
I call it my new weaponized incompetence because look what you just offered to do. But I'd love to come back and chat on that.
As long as it's accurate, we can make it look pretty.
I've got the substance, but the flair isn't there.
Great. Well, Erica, thanks for the time. This was
really thanks for having me. This was great.
You got it. That was our exclusive conversation with Erica Khalili from Lead Bank. Thanks for listening.
The city by the Golden Gate. Truly the city of many wonders.